Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian dollar bulls were full of bullish charm as the market tightened in the early session of Sydney. However, the bulls soon got into all sorts of trouble. While exploring above the 71 handle, the market rejected right in front of the level of 71.55.65 resistance after posting a fresh high of 71.29. Earlier, news reports escalated that US-China trade tensions had reignited by President Trump, who reiterated his threat to impose tariffs of $267 billion worth of additional Chinese imports if China retaliates for the new levies. The market at this stage does look like it could sell off further. For the fact is that we do have an outside range day, but would like a little bit more confirmation. But nevertheless, the downside objective is at 70, 20, 30 and reassess from there, as we could be looking towards lower to the 69 cent region, which holds around 40.70. On the day, though, I do expect to see any rally to fail towards 70.85, and above there, the 71 handle should offer further supply. Well, looking at the euro, the market is at this stage squeezing a little bit higher as the dollar index weakens overnight. It sounds like a familiar story when you hear trade wars continuing in the background, especially in the news stories. However, it wasn't Trump this time, but instead it was the US Treasury Secretary Stephen Mnuchin. He turned around and said in a news interview that China shouldn't weaken its currency if the differences between the two countries remain unsolved, further adding that the renminbi should be part of any possible trade deal. Additional to this, the Italian recent concerns appear to be back on the back burner, while the US Treasury yields still seem to be concerning after the US equities took a massive sell-off overnight. Still, looking at the technicals, I do expect to see 115.65 to serve as a cap and look back towards the downside of 114.60 to 113.70.75. The dollar yen case is taking on a severe beating overnight when the bulls take the exit door rather sharply from the break of this level of 112.60. Now, from the break, has put further exposure to the downside and looks towards 111.45, with any advances towards 112.60.75, most probably now as a resistance. So let's see how the market plays out, with the marriage still with the MACD and also the RSI does support the bearish case. Well, the pound has taken out my stop and I'm now neutral for now as we look towards the resistance of 132.60. And as you can see here, the market is climbing further on the last 6 days. What is helping it, the fact is that the divorce proceedings with the UK and also the EU for March 2019 is looking a little bit more to the positive side, although the Irish border issue is still a thorny problem. Still, the $64,000 question is still remaining out there whether Britain and the European Union will reach an agreement over Brexit. Still, looking at the technical, as I mentioned, I'm neutral, but a move under 131.55 could give further scope to the downside and look towards 130.15.30. The gold outlook, still sideways. Not much to really talk about here. The market is still pretty much remaining directionless until we get some kind of indication if we break out of this level. But I'm a buyer from 1,176. And the gold, as the oil outlook, crushed the support level of 73.50 overnight. And therefore, we've seen further technical implications to a move down with the RSI and also the MACD. My objective at this stage, where I've outlined here, is around $70 to $71 a barrel and reassess from there. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.